Come tu se me but non, ora tu se me but non, for your thought it, then she got it. Roy.
Friends, this is a guide on how I use Fibonacci to trade gap downs along with candlesticks. So I'll explain it with an example. The stock is Voltas. This is something that I traded today. So why Voltas? Voltas was part of the candlestick warriors list on vcptrader.com. So if you are unfamiliar with vcptrader.com, it's a free website. You can find all kinds of stock watch lists there, and my favorite obviously is the candlestick warriors. So the candlestick warriors gives you, one of the sections gives you stocks which can potentially move a lot, and so I had picked Voltas from that. But the Voltas opened with a huge gap down, and the first 15 minutes it got decimated, and then it got a pullback. So usually I trade these gap downs with the help of Fibonacci. So what I do is order the swing high, right? From there, I draw a Fibonacci retracement to the today's low, right? And I check if the Fibonacci retracements, if this drawing is correct. I validate this drawing, and I found that it is correct. So then what I do is I wait for the pullback to the 50%. Now the pullback would end at 38 or 50 or 61.8, we don't know, but I prefer 50. If it goes to 61.8, it tells me that it's not really a short. So the best trades will always retrace to the 50%, not more than that. So here I got a retracement of 50%, and behold, what did I get? I got a nice bearish engulfing and a shooting star all combined to one. So I took a shot here, and my target was in this line. Let me put it in another color. Back. And you can check why I took that. Clue is in the daily chart. Okay. And as soon as I entered the short below this low, my stop loss was here, and it went down to the first extension of 1.236, then 1.618, and then 2, and near 2 was my target also. So these are also price, you can book profit levels, 1.236 and then 1.618, and then these are levels in which you can take profit, and you can keep the previous level as the trailing stop as well. So since today was obviously bearish day, I did not think that this would do any retracement before hitting the strong support level of 851. So I waited for it, and I've finished the trade here. So that's one trick of how to trade gap downs, because when it suddenly gap downs and gap downs a lot, we are unsure whether the market. So if let's say at the end of 9:20 candle, in the first 5 minutes, I had shorted, then there was a huge retracement up, right? Almost 50% of the move was retraced. So wait for the pullback, and the pullback, what is the safe level? It's a 50% level. We know that. So wait for it, and let there be a candlestick pattern which forms there, and then you can take the trade with either the high as the stop loss, or in this case I kept the open as the stop loss, and just run the trade for either 1.236, which is a safe target, and 1.618, and which is regularly a target, and 2, when it is extremely bearish or bullish scenario, you generally get this. So few things to take care. You need to make sure that the retracement that you're drawing is correct, otherwise it's just lines, no meaning. And you need to make sure that there is a candle confirmation to whatever you're doing, right? Don't just do blind when it comes to 879 blindly short. No, that's not the way. We wait for it to to test that level. Sometimes it tests multiple times, it goes up and then comes down. You will definitely get a candlestick pattern, and then you take the trade. You're safe. I think this trade was about 1:6 risk reward. So either you can keep the stop loss here, or in my case, I kept the stop loss slightly well open, and only profit booking that I did was here. So it's almost 1:8 now, right? So that's the advantage of using candlesticks with Fibonacci. You get a very good idea of where to book profits and maximize your profits. So I hope this was useful. Please do like and subscribe for more such videos. I hope you had a great day at the market. Thank you very much. Have fun. Bye.